It's his flagship show, The Morning Brief. I'm Julie Hyman. Let's get to the three things you need to know today. First up, Intel shares are falling as President Trump calls on its CEO to resign because of what he calls conflicts of interest. This week, Republican Senator Tom Cotton asked the chairman of Intel's board to answer questions about CEO Lip-Bu Tan's ties to China, including investments in the country's semiconductor companies and others with connections to China's military. In response, Intel released a statement saying it is deeply committed to the national security of the United States and the integrity of its role in the U.S. defense ecosystem. Plus, U.S. stock futures higher today as investors assess the impact of tariffs on the global economy. President Trump's sweeping new tariffs officially taking hold. They're now higher for almost all U.S. trading partners. Now, the average U.S. tariff rate is 15.2%. That's according to estimates from Bloomberg Economics, and it's well above the 2.3% last year. It's also the highest level since the World War II era. But plenty of U.S. trading partners are facing even higher tariffs. Among the highest, Switzerland, Brazil, and India. Mexico and Canada also facing high levies, and a deal with China remains to be completed. Also, Apple seeing tariff exemptions after the company announced an additional commitment of $100 billion in U.S. investments. That brings the total commitments to the U.S. to $600 billion. CEO Tim Cook appearing and announcing the news with President Trump in the Oval Office.
Today, we're committing an additional $100 billion to the United States, bringing our total U.S. investment to $600 billion over the next 4 years.
The announcement provided just enough evidence that Apple was focusing on America without forcing it to make major changes. Let's get a check-in on stock futures. Seeing a little bit of a bump up here this morning. The Nasdaq indicating a gain of about 0.75% at the open. The S&P showing gains of more than 0.5%. The Dow around the same amount here. This despite the fact that we had these tariffs going into effect, but of course that was well telegraphed to the market. Let's dig into the top stories of the day a little more now. President Trump calling on the CEO of Intel to step down following reports about his ties to Chinese companies, and higher tariffs on dozens of countries now in effect, with President Trump taking to Truth Social as the clock struck midnight, saying that billions of dollars in tariffs are now flowing into the U.S. Plus, Trump also threatening 100% tariffs on chips unless companies are building in the U.S. Joining me now, Ramzan Kamarali, host of Morning Brief Market Sunrise, and our tech editor, Dan Howley. Dan, this news on Intel crossing this morning, I have to admit the Tom Cotton commentary coming earlier in the week kind of flew under the radar, but then President Trump definitely highlighting it this morning.
Yeah, it's interesting. Obviously, 10 is just still green as far as being Intel's CEO. And so this kind of shakeup would, I mean, I can't imagine what it would do to the company at this point. They're right now trying to figure out what they would, what to do post Pat Gelsinger. They were trying to figure out what to do with the foundry business. Obviously, Intel's sticking behind 10 for now. But yeah, the Tom Cotton letter basically asking about Tan's prior investments in Chinese chip companies, as well as the Cadence settlement that they had completed when he was the CEO over there. And so, you know, there's concerns seemingly from these politicians, I guess Republicans, being Tom Cotton and the president. But I don't know if this means that we'll actually see Tan step down. I think it also, though, brings into question the kind of government subsidies that the company has gotten, right? Like, will they continue to be able to receive those? Will they not? Will Trump pull back on those? Will there be any issues beyond that? So I think those are big concerns right now, and it's still unknown.
Yeah, most definitely. And as you mentioned, the backdrop for this company is already really troubled, right? You know, Lip-Bu Tan hasn't been the CEO for very long. Pat Gelsinger was the CEO, and there have been a lot of questions about his strategy to make Intel more of a foundry, more of a manufacturer of chips for other companies. That was a strategy that didn't seem to catch on. Tan coming in here trying to sort of put his imprint on the company, Dan. And so this feels like just yet another hit to a company that's already struggling.
Yeah, I mean, look, there's no doubt, and look, Tan has said it himself that they're wildly behind in AI. They have to catch up. They're trying to figure out what to do with that foundry business. It's still I mean, the main customer is still Intel, right? And they say that it'll take a while for them to start getting third-party partners. There's been questions about whether or not the chip technology that they're using, 18A, will actually be used for third-party customers. They kind of put those questions to bed during the most recent earnings call. There's then questions about whether or not there's delays. There's been different reports about that with 18A, and what that means then for 14A, the coming technology. So they're really under the gun. Obviously, they're nowhere near the likes of Nvidia or AMD when it comes to AI. They won't be for quite some time until they can come up with an AI chip that's capable of competing. But yeah, I mean, it's just not looking very good for Intel this morning, at least.
Yeah. So we'll see. And by the way, we are out to the company for comments, or awaiting any kind of renewed commentary on this situation. So from zooming in on Intel, let's widen the aperture and talk about what's going on with tariffs. Ramzan, so tariffs on many countries going into effect as of midnight. What are we seeing there, and what kind of reaction are we seeing around the globe?
It's really interesting, actually. I think there's now a level of certainty that we are getting these are the tariffs that countries are going to be facing now. Asia was a really interesting market. Markets were actually pretty positive. In fact, in China, the Shanghai index hit its highest since 2021. That's on the back of some really impressive trade numbers, which showed that actually exporters are rushing to get their goods out before the August 12th deadline for China. So they had some pretty decent numbers there, and that lifted shares there. Asian semiconductor stocks, really interesting as well. They were kind of mixed. The ones that have got big investments in the US, like TSMC, they've got a $165 billion investment in the US. Their shares rose about 5%. The likes of Samsung also rose. But then take a company like Tokyo Electron. Their shares fell quite heavily on the back of the tariff news, of the 100% tariff news. And across Europe, the shares were higher as well. But that's not really to do with tariffs. That's more to do with the fact of the potential talks between President Trump and President Putin coming up, and perhaps some sort of end in sight for the war in Ukraine.
Right. So those talks coming up potentially. In the meantime, Ramzan, the attempts on the parts of the Swiss to avoid a 39% tariff were not successful, but it sounds like they're still trying.
They are still trying, and it's really interesting, actually. So the president, as we all know, flew over to Washington to try to get a deal done, failed. And now there's some lawmakers in Switzerland calling on Gianni Infantino, he's the head of FIFA, the football organisation, would you believe, to maybe get involved in negotiations with the Washington administration. He was actually with President Trump just last month in New Jersey at the Club World Championships. He was also at President Trump's inauguration too. So they think maybe he has a better relationship with President Trump, and perhaps he might be able to get a deal done there. But 39% tariff has really hit Switzerland. In Europe as well, we know that we've got a 15% tariff. And the UK, the tariff deal was set back in May at 10%. And it's really interesting, the Bank of England today cut interest rates, but part of the commentary they talked about was tariffs and the impact on tariffs to the UK economy. They now don't think it's going to be as bad as they thought back in May, but they still think it will hit the UK economic growth by 0.2%.
And then I got to ask you also about what's going on in the UK proper. Now, it, of course, has a tariff agreement, but that's not the main headline today. The main headline today is a rate cut from the Bank of England, right?
Yeah, and it's caught everyone out, actually, because the markets were very, they were expecting a rate cut. They were expecting 25 basis points, but they were expecting perhaps more signs that there could be further rate cuts coming. But that doesn't seem to be the case. In fact, it was the first ever revote by the Monetary Policy Committee at the Bank of England. That's never happened before. Initially, the vote was tied. They had to do a recast of the vote, and in the end, they have cut rates by a majority of 5-4. So the governor of the Bank of England, Andrew Bailey, he had the deciding vote to cut interest rates today. But that's given the markets a bit of a wake-up call, and now they're not really that positive about further cuts down the line. Yes, rates are at a 2.5-year low at 4%, but whether they'll get many more for 2025, that looks more or less likely.
And let's bring it back to tariffs, but sectoral tariffs, because Dan, you're watching this situation with semiconductors closely, I know. The president talking about 100% tariffs on semiconductors into the U.S., unless, like Apple, you make an investment. And there's still a lot, it seems, that we don't really know here. Like, how much do you have to invest, right? Like, are smaller companies, for example, at a disadvantage? So it seems like there's still a lot of confusion.
Yeah, I mean, I think when he announced it, I think it's important to note that there's no official tariff announcement yet. This was him kind of seemingly talking off the cuff during the Apple Oval Office meeting yesterday. He leaned over to Tim Cook and said, "I bet you didn't know we were going to do this." And so, the 100% tariff would apply to companies that, as you said, don't build in the U.S. It's still difficult, though, to tell or parse whether that's just the companies that buy semiconductors or the companies that build semiconductors. I mean, seemingly it's both, just because of the comment that he made to Tim Cook. But this does advantage companies like TSMC, like Intel, like AMD, Apple, NVIDIA. They've all invested, Samsung, SK Hynix. They've all invested heavily in the U.S. as of late. Part of that is Trump. Part of that is the CHIPS Act. They all kind of receive money through that to invest. Obviously, U.S. chip makers, Global Foundries, Texas Instruments, they would have been pretty fine as is. But there's still plenty of smaller chip makers around the world that will have difficulty with this. We think of chips really as the CPUs and the GPUs, right? The Intels, the AMDs, the Qualcomms and the NVIDIAs. But there's plenty of smaller chips that are needed in devices that we use every day. And those companies may not be able to invest in the US as heavily as something like Apple, one of the biggest companies on the planet. So, I want to see kind of where this goes. If there's a threshold for the size of the company, if there's a threshold for that investment, what building means exactly. I mean, Apple's not, going out and building its own factories. It's partnering with folks to do that. So we just kind of have to wait and see when that official announcement comes.
Yes, we will, as we have with all of these tariff announcements. And even when we get them, sometimes there are a lot of details that are unworked out. So we shall see. Ramza and Dan, thank you so much. Appreciate it. Let's get to some big earnings news now. Eli Lilly raising its full-year forecast after topping the street's expectations for the second quarter. Despite the strong results, though, news about its highly anticipated weight loss pill is weighing on the shares in pre-market trading. Here with the details, our senior health reporter, Anjalee Khemlani. So really interesting. This is what the street was waiting for.
Yeah, that's right. This pill details are what the street was waiting for. We're looking at how that pans out really in the GLP-1 pill race. First, let's get to earnings results, though. As you noted, a solid beat, what the street was looking for, and really good news coming after Novo Nordisk's disappointment yesterday. As you can see, almost $1 billion in revenue over, and then a solid beat on earnings per share. Meanwhile, let's look at those pill details. So orforglipron, the GLP-1 pill that Eli Lilly has, lots of hope behind it and momentum behind it to be first on market and to be best in market, following the trend of its GLP-1 injectables. Meanwhile, the results were slightly disappointing. 11% weight loss. If you recall, Novo Nordisk also has a pill in trials with 16% weight loss, so it's below the competitor. Meanwhile, 24% drop off at the highest dose, and that is something that investors are also looking to get some clarity on, why there was such a high level of drop off on the highest dose, because that could mean that patients won't necessarily see through. Now, some investors do think that these results are not necessarily as disappointing, and doctors will still prescribe this. The idea behind the pill race is that it is much more convenient than the injectables, and it is likely to then still provide some relief to the access situation of injectables right now. Meanwhile, Eli Lilly CEO Dave Ricks on the earnings call today talking about most favored nations. I know we've talked a lot about that on this show, and addressing that idea, he said, quote, "If we import controls, we risk the worst of two worlds. world. So low productivity of Europe's sector and the high out-of-pocket prices of the U.S. insurance market, meaning that cost shifting will then be put on U.S. patients. So there's a lot to sort of think about there. The company, along with other big pharma companies, has been pretty adamant about the idea that in Europe, the system is much different and there aren't PBMs, there aren't hospitals, there aren't other players that are looking to make a buck off of the drugs. And so that is why they can afford to do the pricing there. And so we'll have to see how all of that resonates with DC.
We will. And we're also going to dig more into Lilly with Evan Seigerman, an analyst who covers the stock in the next hour. And you'll be back for that, Anj. So thanks for that. Coming up next, though, we're going to count you down to the opening bell on Wall Street. Don't go anywhere. You're watching Morning Brief on Yahoo Finance. Now time for some of today's trending tickers. We are watching Duolingo, Fortinet, and Celsius. First up, Duolingo soaring after the language learning software company reported second quarter results that beat expectations. Duolingo also beating on key metrics and raising its full year forecast. It cited better than expected performance of its subscription tiers over the second quarter. The company also said it was making its biggest acquisition to date in order to speed up the broadening of its offerings on the app beyond language learning games by buying NextBeat. It's a music gaming startup based in London. Next up is Fortinet. Those shares are falling after the software company narrowed its full-year revenue forecast. It did raise its full-year outlook for billings, but cut its view for services revenue. At least 3 analysts downgrading their ratings on the stock, saying the product refresh cycle is now looking like, quote, a much smaller catalyst than expected. The software company now has 14 buys, 34 holds, and 2 sells. And finally, energy drink maker Celsius surging today. Second quarter sales eclipsed expectations, largely driven by the recently acquired Alani Nu brand. Truist analysts noting the core Celsius brand returned to growth, and the new business, the Alani Nu business, continues to surpass expectations. You can always scan the QR code below to track the best and worst performing stocks with Yahoo Finance's trending tickers page. Well, more than 3/4 of companies in the S&P 500 have reported results for the second quarter in what has proved to be a strong earnings season overall. More than 80% of companies have beat earnings per share estimates. That's above the post-pandemic average of 78%. Joining me now is Gargi Chaudhry, BlackRock Chief Investment and Portfolio Strategist for the Americas. Gargi, it's good to see you. So earnings definitely have seemed to have sort of dominated here in terms of what has driven trading. We have our interest rate outlook, we have our tariffs, but it seems like earnings have kind of stolen the show here.
Absolutely. Good morning, Julie. It's great to be here and to see you. So to your point, absolutely, when we think back to just what the expectations were coming into this quarter and the revisions that we had perhaps seen of analysts just revising the revisions ratios, just moving lower and lower. And we've had such a tremendous beat compared to that, but just even on its own. So I think the big story that's driving the markets, as it very well should, is how the large cap quality tech and friends, if we can call it that, names, continue to have absolutely stellar earnings growth. All of the capex that has gone in is actually able to finally show some ROI in the sense that we're seeing those large revenue beats and revenue growth. I think that's the first story. But then, to your point, I was listening to the show earlier. There are a few other positive stories as well with respect to perhaps interest rates being a little bit more lower, maybe even more range bound, which I think is also another driver of markets.
At the same time, Gargi, there is an interesting disconnect, as there frequently is with markets, right? We just got a jobs report that was bad by many estimations, right? We got an ISM services report this week that also seemed to indicate some weakening in the economy. You do have a decent number of companies talking about the tariff impact, and you still have these tariff headlines hitting. And yet on the flip side, you have stocks that continue to push higher. You have these earnings numbers that are on balance stronger. So how do we sort of reconcile those two things as investors?
Yeah, and you're right. It might be if you read the headlines or have your own personal experience of prices going up versus looking at the stock market prices, there might be a dichotomy there. And obviously the real economy and the stock markets are not the same. We all know that. But I think a couple of things that I'm focusing on are the first is, you're right, the labor market certainly is not where we thought it was. I think the revisions were more important than the data that we got for this month. And I think that chances are that we can continue to see a few areas of weakness. But at the same time, I think what that also means is that the Fed is likely to be able to resume their rate cutting cycle. So I think the market takes a lot of relief from that we've sort of been in this 4.375% range. And now the recognition that here's a Fed that is going to very quickly be able to adjust their path on policy rates, because they talked about it even before the payroll report was available to us. They did say that the risk of labor market is something they're watching. They talked about the unemployment rate, of course. But now that we're beginning to see that weakening, perhaps that's where we have the Fed come in and cut rates even as early as September, and then continuing to do so for the remainder of this year. So that's number one. But no doubt, Julie, the point that you make around sort of this dichotomy, this divergence of real and stock markets is a meaningful one, which is also why we've been telling investors that this is the economy and this is the market in which you really need to be diversified and add hedges. So this beta move and this stock market move that has been tremendous may run into, and may being the operative word here, may run into some issues. August could very well be a little bit of a volatile month. I don't know that any pullbacks we see in the market will be long-lived. I think they'll be short-lived in nature. But at the same time, this is why we think adding to fixed income, adding to income generating parts of the fixed income market, because you have so many of those, is really important here, especially in the front end and the belly of the curve. Adding to diversifying strategies, especially global market neutral strategies that don't have a lot of beta to the equity market, is really important. And then having asset classes like gold and Bitcoin, which can and have been a diversifier, can also be important.
And you guys are still pretty emphatic that AI is also going to be and should be a part of the portfolio. I think that's it's almost a given. It feels consensus at this point. But what is sort of the nuance behind that, I guess, especially since we still have these companies spending an enormous amount, and since many of the stocks have rallied so much?
Absolutely, and you asked the right question. What is the nuance there? And I think the nuance is that while the AI theme has definitely been in every. It's not Jeff Rosenberg from BlackRock who joked with us that it's not earnings season anymore. It's CapEx season now, and it's all about AI CapEx. But not all AI companies are made equally, right? So I think there's a recognition more and more that there are some names within the AI space that are going to really be able to monetize the CapEx that has been spent, and are perhaps already doing so in some of the sort of data inferencing names and the hyperscalers, and there are others that will not. So really being very active within that mega trend of AI is also important today. And we've been seeing a tremendous amount of interest in our BlackRock Active AI and Tech Fund, which is exactly that, which is looking at AI as a mega trend, but really thinking about managing AI specifically in an active manner.
Gargi, good to see you. Thanks for joining us.
Thank you.
That does it for Morning Brief. Coming up, opening bid with our executive editor, Brian Sozzi. Keep it right here on Yahoo Finance.